any expertise in the SaaS software arena?
So we like the concept of SaaS, and desperately trying to see where we have real expertise within that. I mean, I'm trying to think through all of our investors. I mean, over and above, so I don't think that any of our investors have specific SaaS businesses that they've sold. We all have a view, and we like SaaS as a kind of starting point. It fulfills our capital efficiency, and we have looked at a couple of businesses, but it depends, of course, what field it's in, so who you're selling to. So obviously I'm not going to mention names, but there are some which we're definitely selling to people that we could be very helpful for, as in their primary market. So I suppose we're not Nation Capital or anything like that, who would be possibly better at that from an expertise point of view. But we have other things. Notion. But we have, we will bring to bear as much expertise as we can. And I should say, I mean, I never want to oversell. It's not that I don't want to oversell, but I should be clear, and it answers one of the kind of questions that I could have been asked, which is the expertise, the experience, and the network we bring doesn't transform businesses. It's not like it will drop water or special potion and suddenly a bad business will become a good business. What I think it does is it makes the path to hopeful success more efficient. So the very, very good example I give, but it applies more widely, is if any company wanted to meet the head of British Airways, they could definitely do that themselves. It would require 8 months of going through various assistants and deputies and whatever, and Brent can do it in 8 seconds. So it's that kind of thing. But similarly, the mistakes we've all made in the past, and there are countless numbers of them, we can hopefully avoid this time around. It's not going to be perfect because there will still be ups and downs.
So can I sort of follow up that question in terms of, I'm not even in on my questions, is how involved are the Brents and you know, your lovely set of partners? How active are they in the investments you make?
So they don't come and make the coffee, which is arguably a good thing because Brent's coffee making skills is not good. I think there's a degree of push and pull here. So there are 3 factors that any entrepreneur should consider about whether we're decent blokes to be investors. One is that the board seats will typically, but not always, be taken by either Sean, who's the other general partner, or myself. So firstly, you have to trust that we have sufficient nous to be able to spot when it might be relevant for one of our investors to come and give a hand. The second thing is that you have to trust that we are sufficiently connected to them, and we are, that if you want somebody and you ask, we can facilitate that. And thirdly, we have a fortnightly investment committee meeting and a monthly get-together of all the investors. And actually at that stage, we talk about all our portfolio companies, and we kind of have almost a brainstorming internally. So you have to trust that we can then communicate anything that came out of that to the companies. So in terms of actual days, I mean, it varies depending on the company. TweetDeck, I think at the very beginning when we first invested, had quite a lot of time with Michael to talk about viral marketing, a lot of time with Brent. As they've grown, actually they've tended to use us, or Ian's tended to use us more as his kind of UK sounding board, and that's been me and Sean. City Socialising has had, Sanchita, who's the chief executive, has had 3 calls with Michael, 3 calls with Brent. I've been helping out in the interviewing of head of product, head of marketing. I actually did a financial model for her in answer to the question as well, but she's ignored it, which is fine as well. But and we made the investment in November.
I've got 2 questions. You said that capital efficiency was a key criteria. What's your measure for that, and what's the threshold? And then secondly, you said that you want enough money to, the right amount of money to reach the next stage.
Yes.
What kind of time span would you expect that to cover, like 1 year or 2 years? Or?
The second one's almost easier. The time span depends on the business. So actually what I mean is, and in this case I think ProFounders is very aligned with any entrepreneur. I really do believe that the second round of institutional capital is your highest risk round, because you don't have any flexibility, you don't have that much flexibility in timing, and it's the one where you might get the most dilution. So I'm a big believer that, yeah, obviously you want to get the highest price at the first round and every round of financing, but actually getting the right amount of money and the right setup is more important. It's not a time, I mean everybody goes 15 months or whatever, it's not that, it's what can you do in that time? It kind of depends where you are now and what it's going to take to do it, and that's a call from us. But if I know, for example, that it's going to take 3 months before a website is live, and then you're going to beta test it for another 3 months, you're going to have to probably have 2 years there, because you're not going to be realistically going to prove anything beforehand. However, if everything's up and running, and this is just a question of moving from a kind of initial proof of concept to maybe 3 white label deals and a bit of marketing spend, it might be that the timeline's much shorter. Within the timeline, I also allow mentally at least 3 months, if not more, to do the capital raise. So you know, if X is the critical point, you have to kind of go back at least 3 months, because as we all know, VCs take ages. On the capital efficiency point, I suppose I'm relatively being a purist in terms of the definition, which is I don't want to put large amounts of money into fixed assets. There is always an argument about where marketing spend, which is often a large, for consumer websites, a large spend, where that fits in terms of capital efficiency. Because of course, if you spend $20 million on marketing, are you being capital efficient? Well, something like marketing, I actually think is a capital efficient way of doing it if you're getting a return on that investment. So I suppose capital efficiency for me says, again, it goes back to your second question, on whatever money that we're putting in, and it's going to be a low amount of money, can we prove things? Or do you need to tie up a lot and then get another tie up, and in fact there's no proof points along the way? More crudely, I suppose it rules out semiconductors, because we all know they're not capital efficient. It rules out probably enterprise software as well, actually, because that's not that capital efficient. And there's no limit. I mean, our limit internally is £1.5 million is what we invest. But equally, because we're agnostic about whether we co-invest, the round might be, so the biggest round we have participated in is probably 3 million sterling, and we were one of 3 investors.